I won the debate because me, Kevin, didn't show up. I just got punked because I'm insignificant. I'm just a loser in a pink hat and a small town house. I just got bent over and ravaged by Kevin. Turn this garbage off. So it's actually going to have an epic freaking intro with me and Kevin dancing to Jeremy. You just ruined it, man. Whatever. So he's not here. It's fine. I'll just do a live stream. I saw the viewers drop from like 140 to 83. Kevin, you didn't do that to me. All right. Let's go through some comments and then we can just talk about Tesla. Oh, yeah. So I see a lot of crap talking in the comments, okay? Some pro strongman, some pro Kevin. I don't know who to believe. Are we going to change your minds today? I don't know. Let's see. Dun, 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 dun. Strongman is my boyfriend and butt lover. Do I know you? Does this make their debates 1-1? It's 2-0, bro. Actually, the first one wasn't really a debate. I mean, I'm being honest with myself. It was more of like a pointed interview. You know, a debate is like you have a topic, Tesla, and you debate Tesla. But of course, first one was fun. It was entertaining. Yeah, that's right. I won. Crush. Tesla's going to 0 tomorrow. Yeah, so Kevin had to reschedule a couple times. Maybe it was screwing with me. I don't know. But he had to reschedule, and eventually we agreed to 7:15 a.m. Pacific time, which it is, 17 minutes past that? He could be sleeping. You know, he's a busy man. Or he could be punking me. I don't know which one it is. We'll see. But either way, just super chat me all your money, guys. Come on, give it to me. Make it rain. Mark Stathis, mad, bro. Look, anything I do is not a waste of time, okay? I tell you to max your tax advantage accounts and buy VT and don't buy Tesla. As a matter of fact, I'm starting to think there might actually be a time to short Tesla because you can kind of look at the luxury auto market and you can kind of guess, okay, what percentage of the luxury auto market would Tesla capture? Best case, okay? Well, you look at their production, you say, okay, at this point, they're probably not going to make it. They're going to miss earnings or revenue or something. And around that time, you could short. But then again, Tesla shorts the premiums on the put options. Oh my God. I'd rather just buy VT. So y'all do whatever you want. Let's see. Kevin is depressed because Tesla went down last week. So Tesla is, extremely volatile. And if you look at all Cathie Wood stocks, they all freaking rocketed up during the pandemic. And then they kind of stayed flat, up and down, up and down, up and down. And then they had that massive freaking crash. It only takes one earnings miss or revenue miss, and these stocks get freaking butchered. Even La Tesla. Because now Wall Street controls Tesla. It's not the freaking retail investors. So I would not be surprised. I'm not saying the company's not going to do well. I mean, I think they're gonna be around for a long time. They're not going out of business, but I don't think it's $1 trillion market cap company. But you call me crazy, bro. If Elon actually produces a robot, and it actually does what he says it's going to do, I would potentially change my thesis. But until then, no, I don't believe that crap. Let's see. Yeah, apparently he has like 70-something% of his portfolio in Tesla. Oh, yeah. Tesla. So, whatever. I have 1.1-something% of my portfolio in La Tesla. And I think that'll be a lot lower in a couple of years. So we'll see. Let's see. Interesting comments. So many freaking comments. Yeah, if I got to the size of Kevin's channel, I would have to do like members only. And I see why they do it. Because the last debate/interview we had, there were so many freaking comments. I could not keep up. It like hurt my freaking brain to look at it. So I can see why they do that. But obviously I wouldn't charge like $50 freaking dollars. You can short Tesla for a few minutes. You ain't going to have to wait for the news. You read the chart. I don't read charts, man. I don't read charts. You know what my favorite football team is, ladies and gentlemen? Guess. I don't even watch football, but there's a certain team that is kind of similar to my certain favorite ETF that I suddenly just fell in love with just out of nowhere. Like I kept seeing it VT and I was like, oh my God, do people have VT? Like they love it. And I was like, no, it's a football team. He will show when you give him your Adobe analysis. Ooh, sick burn there. I mean, I did some initial analysis. I was in tax season, okay? You can't just freaking bash me like that. I will do it. Or I'll pay him back. It doesn't matter. I mean, I can afford $300. Maybe not $400, but $300, okay. Ask 7 Kevin why he sold 20 houses because crash, but keeps holding Tesla. So if he actually shows up, we're not going to talk about anything other than Tesla unless, it naturally goes somewhere else. Like the whole purpose of this is not, why are you grifting or this or that? It's, is Tesla a good buy or not? Because Tesla was a good buy back in the day. Is it a good buy now? I'm not so sure. But whatever. It's the future. Zillennial Blueprint. Does anyone know why his employees quit on him? I didn't feel like watching the video. Who knows? I mean, honestly, I don't want to be a freaking employee forever. Being an employee sucks, especially if you work for somebody that's like really hard charging. Because when you have your own business, like when I do YouTube, which is a business, I have revenue and expenses, and I file a Schedule C. You know what that is, tax people. If you have a business, you're motivated. Like you work hard and hard. I pump out videos and I enjoy it. But if I had to work for somebody and when they were pushing me and working like crazy, that would suck, because your salary's fixed and you're not going to become wealthy working for an employer. So maybe they were just working too hard. I don't know. Strongman wants us to buy an ETF. What a beta. Yeah, I'll be a very rich beta. Meat breath couldn't get up for this early debate, just like he can't. Oh, okay, that was pretty sick. Let's not go there, ladies and gentlemen. Okay. Highbrow joke. I will buy La Tesla at 600. So people say they're going to buy Tesla at 600, 700, and they say that because the stock is so high now. They think, oh, well, if it drops 40% to 600, I mean, it's got to be a buy. And that's not the case because you can look at like Cathie Wood stocks and Jeremy stocks. They fell significantly. And even if they consolidate for a little bit, that doesn't mean it's a good buy just because it fell. Every company has an intrinsic value and you need to actually figure that out for yourself. And I don't think it's 600. It's actually really hard to value Tesla because there's so much hype and we don't know what the future holds when it comes to robots and stuff like that. But I truly believe it's a luxury car company that's, going through a temporary spike in excitement because they're the leading EV maker right now, and it's new and exciting. Everybody wants an EV. It's cool. But at the end of the day, with the massive competition coming on, I don't see them being a massive company. I don't understand it. But whatever. Maybe I'm just a moron. Maybe I should watch more of Solving the Truck Stop Problem. I'm sure he'd teach me something. Could you really see Elon just bailing on Tesla and going else entirely? Like when he dropped PayPal? No. I mean, I'm sure he'll have some kind of involvement, but as the company matures and, he can't use it as his personal piggy bank, he might move on to something else. If you had to pick, would you invest your life savings with Cathie Wood or Lafufu? Oh, that is tough, man. I don't know. That is harder than researching Tesla or, debating somebody. It's just, I can't answer that question. That's just too much calculus involved. Why VT and not the SPY? Okay, I want you to go look at a historical performance of international versus US stocks, and not over the last 10 years. Go look at over the last 50 or 60 years. And you tell me if the US stocks have always outperformed. In my opinion, well, it's not an opinion, it's a fact. Markets are cyclical. Now, I don't know when the cycle is going to reverse, but it will eventually. And I think international stocks will outperform. Now, does that mean you should buy 100% international? No, because I don't know when the cycle is going to reverse. I can't predict the future. But what I can do is look at historical trends and say, okay, I can't time the market. I mean, I can try. We'll see how Baba does. But at the end of the day, I know if I buy the entire world, I'm going to at least grow my wealth with the world. And I don't have to worry about timing the market and selling stocks and buying stocks and paying taxes. I just buy the world over and over again. And you can see US stocks getting freaking crushed. I really think going forward, international might outperform US stocks because like everybody thinks all these tech stocks are just going to go up forever. And you see them just get freaking decimated. All of them. Except for that Tesla. Anyway, that's my thesis. So you guys buy whatever you want. If Jeremy doesn't come. I'm not big enough to get Jeremy to come on. I mean, eventually he will. He'll have to. At some certain point, he'll have to. Yeah, I think Kevin fell asleep. Or he's still sleeping. Or he punked me. Thoughts on VUG? Trash. Too many tech stocks. Too concentrated. False. If he actually shows up, would you ask him why he dislikes Chinese stocks? I mean, if we get there, but really the focus is Tesla. And to be honest, there are risks in Chinese stocks, but I think if you look at the recent performance of the stock prices and the businesses, the underlying businesses, Tesla went up massively, enormously in the span of a year. Chinese stocks got freaking decimated. And both are profitable, but you can overpay for profitability. Whereas I look at China and it's like, okay, people are scared of delisting. They're scared of the auditing issues between China and the United States. But if that works itself out, which I think it will, because China wants money, they want our capital to go into invest in their businesses so they can grow them. I think it's all going to work out in the long run, but I don't know. I could be wrong. I could be wrong, bro. Let's see. Yeah, it did fall pretty significantly, but it's not even close to where the decimation ends. That's why people think, oh, it fell, so it must go back up. No. What do you think Baba and Baidu stock prices should be at? Well, I'd have to figure out the weighted average cost of capital and, use that as a discount rate. Because what I do is when I calculate the price, that isn't the fair value. The price that I calculate in my model is what I would pay for Baba to get a 15% return. Theoretically, doesn't mean it's going to. But in order to find out the fair value of Baba, you actually have to figure out the weighted average cost of capital, which is it's like a percentage of bonds and common stock and preferred stock. There's a whole formula. It's not super complex, but I don't feel like freaking doing it. I learned it in school, but I don't have time for that crap. Please get Graham or Andre. I would get Graham on. Andre, what would I talk about with Andre? I think Andre's a freaking clown when it comes to investing. 100%. How bad would VT be affected if Chinese stocks get delisted? Almost none. The Chinese percentage of VT is almost insignificant. So if all Chinese stocks went to zero, I mean, VT would feel it a little bit, but it wouldn't decimate VT. It's like a pain, people with them options. Yeah, whatever. Baba is down so much. Yeah, it went down. I mean, that's what happens with stocks. They go down. People think they just go up forever. That's how you get wealthy. Is you find stocks that people have the market has gotten wrong, and you buy them when they're irrationally undervalued. I can't understand why these stocks have sold off so much. I mean, I get the thesis against it, but I mean, I think it's just ridiculous, some of the prices of these Chinese stocks, especially when you look at how fast the economy is growing. I'm not saying to go all in Chinese stocks because that'd be freaking crazy, but if you wanna speculate, you can. Let's see. You can talk to Andre about magic tricks. Peekaboo! Peekaboo! I see you. Is Palantir a buy? I have no idea. I'm not buying it. It's unprofitable. Kevin doesn't know what whack is. Yeah, maybe. I'm sure he learned that in school, but it's so I don't care about the fair value of a stock. I mean, it is useful because you could, if you know the weighted average cost of capital, you know what the fair value of the stock is. And if you see the stock price is way above that, maybe it's time to sell. Like if Baba rockets up to I think if Baba rocks up to freaking $400, $500, oh God, I would sell that in a freaking heartbeat. You don't have no idea. Boom, done. And then I go on vacation. I go see the Great Wall of China. Yeah, go to Bangkok. Go see the Ladyboys. I think your 3.3 trillion year estimate might be a little high. No, that's a bear case, bro. First quarter showed a 1.4% drop in GDP. The next quarter declines will officially be in a recession. Well, next quarter GDP be negative again, sending us. I have no idea. See, people think they can predict that crap. I mean, more likely than not. But I mean, that's a natural part of economic cycles. You go into recession sometimes. But at the end of the day, when I buy my VT ETF, I'm literally not selling it till 2052 at the earliest. So I don't care. I don't have to analyze crap. I just buy the world and don't pay any fees for it, or barely any fees. My name is Andre Treek, and I have not developed object permanence. I don't understand that. Maybe I'm stupid. Virgin taint. I like it. But strong, man. 13.12% of your portfolio is in big tech. Yeah, it is. I can't predict the future, but I know the world's going to be a better place in 30 years. So maybe U.S. stocks keep going up. I don't know. Maybe I'm wrong. I don't know. That's the whole point. Either you're a market timer or you're not. It's as simple as that. Just buy U.S. stocks, bro. Index investing with coal. Jesus Christ. You should do a video with Tom Nash. Yeah, I'll debate him with Tesla. I think we were actually talking a little bit about doing it. SoFi, unprofitable trash. DWAX scam. I just bought your book on Amazon. Yeah, I'm going to write more books, 100%. So once my YouTube channel grows, because right now I have to still go to work, which is a normal person's life. So I don't have a ton of time because I go to work, then I go to the gym, then I have family time, then I have YouTube, then I tutor, then I have a contract job editing accounting textbooks. So like, it's really hard to fit in time to write a book, especially with me about to have a second kid. It's kind of tough right now, but eventually I will get around to it. Broke loser. Good for you. This bozo got played. I got played, bro. You're right. You should get me, Kevin, on your channel. I'm sure you'd have great things to talk about. Aren't you pumping Pokemon cards now? Oh, you're so sad. I should do a video about you. It's like a charity. Okay. Now, people will say you shouldn't make videos about other people because you might pump their channel. And that's true if you actually have a good channel. But if you're a total freaking clown and somebody like exposes you and people subscribe, they're not going to stay subscribed forever because your channel's trash. I mean, like, what is there to watch? So maybe I'll expose you some more, Brooklyn truck stop. I know you. Oh, please, strong man, give me more attention. Oh. Jay Nagy's in the house. Got up early for strong man. Have Brooklyn pop on. Jesus Christ. Yeah, he's literally pumping Pokemon cards. Now, I had a friend that was doing that like a year ago when it was actually popular. Now Pokemon cards are like, they're probably freaking dying off. Like, it's such a joke. Just buy Pokemon cards, bro. Strongman, after maxing out tax advantage accounts, 401k, where do you invest at? Continue VT. Yeah, I just do VT, man. It's as simple as that. Actually, so I don't have a 401k at my work. Well, I'm in the Army. I have a 401k there, but at my work, I don't have a 401k. So literally what I've been doing is just dollar cost averaging into the mutual fund, the VT mutual fund, VTWAX. That's all I've been doing. So yeah, it sucks. I have to pay taxes, but I mean, it's better than not investing. So yeah, it's VT, 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 at least in my opinion, but y'all do whatever you want. Okay. No, don't pump my channel. You need to make videos, Cole. What happened? Bring Brooklyn. I want to see that New York rat. Because I know it pisses him off. I don't let him on my channel, so I'm just going to keep stringing him along. Oh, please, strong man. Oh, please. Wow, this content is really low quality. See, ladies and gentlemen, all you got to do is just have some bright things in the background. I mean, I guess there's some bright stuff, koala bears, and just say everything's going to go to the moon. And then you got great content, bro. You don't think I could do that, you freaking clown? I'm smarter than most of these doofuses on YouTube. Oh, yeah, this is going to go to the moon. And then I make $1 trillion and retire. Mm, mm, mm. Do you prefer multiple of earnings or perpetual growth? I do multiple of earnings because, like, I'm not going to hold an individual stock unless it's a great stock that I think is perpetually undervalued forever. So I just say, okay, I buy the stock. This is how many earnings I get, and I'm going to sell it in 5 years or 6 years or 8 years or whatever. That's what everything Money's Tool does. It doesn't do perpetual growth. It does. Oh, me, Kevin, just text me. Oh, I think he's coming on. Uh-oh. He was actually watching. He wanted to see if I revealed all my secret arguments. He tricked me. Mm. He'll be on in 3 minutes. In the meantime, I'm going to go piss. So I just had coffee and water. And then me and Kevo will debate-o. And then I will be convinced to put all my money in Tesla. Talk to you in 3 minutes. Don't leave the stream. I'm just going to take a piss. Boom, 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 boom. Any more interesting comments? Streaming while streaming. I pee a lot. People, whenever I hang out with, like, I meet new people, they're like, "Strong man, you piss so much." And I'm like, yeah, you don't understand how much water and coffee I drink. I need lots of water to sustain myself. Just watch how much I drink. You'll see. I like to go pee-pee in my toilet. Strong man, are you going to sell your bath water? Hey, whatever I got to do to grift, I will do it 100%. Get some chat mods. I'm not big enough to do that. You know, I mean, I make decent money on YouTube, but I'm not making tens of thousands of dollars. Like, I don't want to freaking pay all these freaking people. I don't want employees. I never want employees. So what I'm going to have to do is, if the chat gets too stupid and I get too big, I'm going to have to do the membership thing and charge $20,000 a month. Kevin will be here in like 1 or 2 minutes. He's putting his clown costume on right now. Coffee actually dehydrates you. Yeah, it does. So I drink coffee and then I get thirsty and then I drink water and then I drink more coffee and then I drink water. So it's like this cycle of pissing, constant pissing. Jeremy's too scared to debate with my bra. You're right. Jeremy's a little chicken butt crack. People will do it for free. Who wants to moderate my chat for free? Make me a mod, Chris. I will ban all the Fufu Defender. No, see, I want the little Fufu Defenders in there because that's where all the fun comes out, because you get to see them justify their stupid freaking stocks. I bought during the bull market. I'm a genius. Oh, Jeremy, man, I had such a great intro playing. Like, we were gonna go live. I was gonna play the Jeremy music. Kevin, you ruined it. Oh, here he is. Hello. Kevin. He said 1 sec. What if this is all a huge troll? Wouldn't that be hilarious? Bum, ba-dum, bum, 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 ba-dum. I was going to do it, guys. It was going to be so funny. It was going to be so freaking funny. And you know what happened? He was late. How much do I bench? More than you. Now, I rep like on the bench, I do 225, 8 to 10 times. I mean, I'm not like super strong. I'm not a freaking power lifter, but I do enjoy lifting weights. And I don't take any supplements either, so it's just kind of like whatever. I'll never be like super mega ultra strong, man. Oh, here he is. You guys ready for this? We're gonna do the intro.
Hey.
Hey!
Whee! Yeah, dude. Wow. Thanks for the intro there. I have to seriously apologize, dude. My life has been so upside down since Tuesday. I've never run a calendar in like the last few years, and now I'm running my own calendar, and I'm screwing everything up. I'm so
hire like an admin or something to manage your time. Get you
well,
up.
I know. I just lost like 2 of my core employees, so everything's like been upside down the last 2 weeks, and like I'm so sorry. So what we're gonna do is I mean, obviously I'm here now, but we're gonna do another video a different time, so we can actually have like a real longer video. So we're gonna do 2 for you and your audience, just to make up for it. So I'm sorry, I'm a total asshole.
I know. I'm really disappointed. I might start going after you again, Kevin.
Yeah,
really,
you know, you should. I deserve it, and it's just like it's terrible. Anyway,
okay.
Yeah. So I literally just. I mean, it sounds crazy, but I think I woke up about 4 minutes ago.
Well, I was surprised. Like you wanted to do it at 7:15. I was like, okay. I mean,
no,
cool.
I mean, like usually I'm up at 5:20, so it's no problem. And it's weird because I woke up at 6, and I'm like, oh, what am I doing today? And then for some reason, I was asleep again. What the hell?
Well, you're a hardworking man, Kevin. I'm sure you need your rest.
Oh well.
So tell me, number one, are you buying Tesla because it's a trade, or are you buying it for long-term appreciation? That's the main thing I want to know.
Sure, yeah, that's a great question. Yeah, so let's hit Tesla. So for me, Tesla is a long term. It's not supposed to be a trade. I don't actually like trading. You know, a lot of people they say, well, but I mean, you sold everything and then you got back in. Well, yeah, I mean, but for me that was kind of like a no brainer. That was just I had a lot of conviction in that, and it worked out. But you know, the market's obviously crazy, but nonetheless, for me, yeah, I wouldn't. I mean, I'm not, but I wouldn't mind if I had to pick one stock and only be in one stock. It'd be La Tesla.
And so you're saying it's a buy now at this valuation? Or are you saying it's a good company fundamentally? Because there's 2 entirely different things when you look at a company. Obviously, you got the financials, the underlying, company strength, and then you have the price of the stock. Now, my argument is, I look at Tesla. Obviously, they're profitable. Obviously, they're growing. It's a great company. They did it. They blew it out of the park. The problem is the valuation now, in my opinion, is insanely high, and I would rather wait until Tesla crashes massively. So you're saying you think right now at its current valuation, you think it's a good buy?
Well, here's the thing. We have no idea if we're gonna keep seeing more pain come into the stock market. I think the stock market was actually brilliant in that it almost sort of forecast that, oh crap, Q1 and Q2 might end up being a recession. We in fact, like, and I think sometimes we forget this, we don't actually have to just have a recession for 2 quarters. We could be in a recession for the entire 2022. And so that in the short term for any stocks is terrible. Quite frankly, if you're concerned about like short term over the next year, just probably don't be in the market. Like I think call options are terrible right now unless you want like a YOLO. Sometimes there's a reason for having like an upside hedge, kind of prevent you from going in because it's like, well, I've got a little upside call and the rest I'm going to keep in cash. Some people like to do that. But otherwise, I think short term, there's nothing good coming in the stock market. But in terms of the valuation, so we'll do a quick example in terms of how we could start with the value of Tesla. So we're expecting earnings per share to be between $13 to potentially up to $15 this year. And so if we divide that by roughly, or 850, which is its current price, by roughly that, we get to anywhere between 56 to 65, a sort of a price to earnings ratio, right? And this is just like in real estate, where it's just a multiple in terms of how much we're paying for those earnings. See, like in real estate, we do gross rent multipliers. Oh, you're buying this property for 20 times gross. 2 years ago in COVID, I bought a property for 17 times gross, and I just sold it for 24. And I literally didn't lift the finger. I did nothing. It was just because the market's gone insane. It's gone stupid. The way we value or sort of evaluate whether or not a company's going stupid in growth, in the growth sector, then has to do with how we measure how much the company's growing for, to see, okay, is this actually overvalued? One of the things that the market hates right now are money losing companies, right? So we want to stay away from those. I mean, we saw what happened to Teladoc. I'd love, as you being a CPA, I'd love to talk to you about their $6.6 billion impairment, but let's stick on Tesla for a sec. So with Tesla, we've been expecting that hopefully for the next 5 years, they'll grow at an average of roughly 50%, right? Elon talked about 60%, but Elon talks a big talk. And anything Tesla, like Elon suggests, I'm kind of just like, okay, that'll be like the icing on the cake. So if we then take, roughly 60 as a price to earnings ratio, and we divide that by 50, we get the PEG ratio of about 1.2. This is a great way now to go to other companies and compare other growth companies. Most growth companies are selling for a PEG of roughly 2, which means maybe they're selling for 30 times earnings, but they're only growing at about a 15% clip. So that, in my opinion, actually, when I'm looking at growth companies and the growth in the tech sector itself, makes Tesla relatively attractive. Obviously, the Achilles heel there is if growth misses, you're screwed.
That's my theory, man. See, have you actually modeled out the revenue assumptions? Because if you have a 50% growth rate, looking at their trailing 12-month revenue, their revenue in 5 years would be $472 billion, which is currently more than Apple's. So my main argument is it's like, okay, yeah, if you put that into your model, sure, grows 50%. Yeah, it's a screaming buy right now. But when you actually look at Tesla's market, which in my opinion is the luxury car market, I don't see how Tesla can sustainably grow at 50% every year, because that's massive growth. I mean, yeah, they're a new company, so obviously they're growing fast. They're exciting, electric vehicles, it's innovative, whatever. But going into the future, Tesla's valuation is basically saying that this car company, which it currently is, maybe it won't be in the future, it currently is going to grow at 50% and basically capture roughly 2/3 of the luxury auto market. That's where I think the flaw is in a lot of people's analysis of Tesla. So can you kind of address that and why you think the stock or the revenue is actually going to grow at 50% over the next 5 years?
Yeah. So, and you got to your 472 with 5 years, right? I just want to make sure we get the right number.
Yeah.
Okay. So essentially what you're talking about with 472 billion is roughly vehicle production of somewhere between 9.5 to 12 million vehicles. And I'm using a range because I personally think the average selling price of these vehicles is going to come down. We're sitting around 50,000 now. If you use that, you're closer to 9.6 million vehicles that you need to produce to get to that figure. But I think we're probably going to come down more to an average vehicle price somewhere around 40, especially if we have lower cost vehicles in other countries, whether that's India or China or whatever. So that's the big difference there, is the expectation that Tesla is not just the premium vehicle market. Tesla actually ends up becoming the new Toyota. So Toyota, and this doesn't mean that, look, I'm just going to interject here quickly. This doesn't mean that in, 3.5 years, Tesla's still just a car company and they're still on that 50% growth rate. Doesn't mean that there's not going to be some other company that might be better to jump over, but you make that determination at that time, because you're right. At some point, the law of large numbers hits. You ramp up that S curve, you're going to slow down. Like, you can't grow at that 50% rate forever. Absolutely. And so the closer you get to that 5 year, the riskier it gets, unless, of course, they introduce, something crazy, which might actually not be that far off, which could be robo-taxis, a Tesla robot, which I think is a little fantastical right now. But ultimately, I think the self-driving for individuals alone, I think the value of that's probably somewhere between $10,000 to $20,000 a vehicle. But anyway, so if Tesla ends up becoming something like a Toyota, well, now we look at Toyota and they're making somewhere between 9 to 12 million vehicles a year. These right now this year, because of supply chain crises, they'll probably only do 8. But they used to make a substantial amount of vehicles. I think at some point they were closer to 13 or 14 million vehicles a year. So it's definitely possible when you look at the international market and you do look at sort of that mid-tier vehicle. Average vehicle price right now is probably $38,000. Tesla's above that right now. Average selling price is somewhere around 50. So you're right. You're still a little bit on that up, but I think there's room for Tesla to end up introducing that lower tier vehicle.
Yeah, so they 100% could potentially grow to sell 10, 15 million vehicles at some point in the future. But like you said, if Tesla really wants to get into the mass market, they're going to have to cut their prices 100%. They're going to have to find a cheaper model and cut their prices. And what that's going to do, especially when you consider competition, that's going to shrink the gross margin of Tesla. So people, I think, they're looking at the profitability now where they basically have luxury automaker profitability. And they're saying, well, that's going to continue into the future. Well, if they have to cut prices and introduce a cheaper model where their margins aren't as high, they're going to be way less profitable. And they might actually turn into a Toyota, which is currently trading at, $250 billion market cap. So are you concerned about that at all?
No, but it's a very good thing that you bring up because, first of all, Elon, a couple of years ago when I first started investing in Tesla, actually more than a couple of years ago, 4 years ago when I first started investing in Tesla, Elon had this claim. It was 2018. It was right after I bought my Model X, which was like December 2017. And then I'm like, oh my gosh, I got to buy this company, which then it was like a no-brainer. Now it's like, I get it. Like you do have to have this sort of discussion. So margins. Elon in 2018 suggested that Tesla would get to 30% vehicle margins, gross margins. Nobody believed him. This was insane. This was also a fantastical claim. Well, now, just this quarter, margins during the supply chain crises and all the inflation that we're seeing without vehicle credits. I think like with vehicle credits, they were like 32, 33% margin. And so this is where what analysts right now are, and this could be also a little fantastical. I'm not modeling this out, but analysts now are suggesting, oh my gosh, like they did 30 way before we thought they would. Maybe they're going to go to 40, and I think this, again, it's like that's icing on the cake for me because I think people tend to get a little ridiculous with these gross margins. We're still manufacturing cars here, but you do have the investment that you're making into Tesla now, which what Elon believes isn't an investment into a car company. It's an investment into a manufacturing company, into the factories, right? The gigafactories. And so he believes that the actual value of whatever, maybe not necessarily value, because the value could be higher when you sell it, but the cost of whatever you manufacture, in his opinion, over with their processes will always approach solely the cost of the raw materials. That actually putting the raw materials together should be substantially nominal. And I think that's why you're seeing Tesla create these new machines. What they're famous for right now is their massive gigapress, where they've created a new alloy of metal, their proprietary alloy, so that they can press the entire rear portion of a car and the entire front portion of a car, something that used to be made up of, almost I think it's 172 or 178 different parts, is now just 2 parts because of these giant presses. And I, without getting into so many of the particulars here, I think the thing about Tesla is really what you're investing in isn't a car company. You're investing in a tech company that also has this ingenious manufacturing process of how can we make things in a way that they've never been done before. Now that model exists, in my opinion, for the next phase of Tesla, and this is what I'm really excited about over the next 2 to 3 years, and who knows, maybe it'll get priced to perfection or just go insane euphoric in the next 2 or 3 years. And then it's like, you know what, I'm out. I don't like being part of euphoria. I know some people think it's there now, but where the euphoria really comes is when Elon says, hey, now we've perfected the gigafactory. Look at, Berlin, Texas. We're ramping those. Now we're announcing 5 to 10 new locations in Brazil, China, India, Pakistan, whatever. People are going to lose their shit.
Well, the key word you said there was euphoria. And that's where I think Tesla is right now. Because at the end of the day, right now, it's a luxury car company based on the prices. And they produce, 1 million and change something cars in the last year. I could be off on that. But
that's like 950, but yeah, you're there.
Yeah, you compare that to like the rest of the freaking auto manufacturers. They produce 9 million, 10 million. It's currently just a luxury auto manufacturer. And when people actually understand that, they see, okay, well, maybe Elon will say that this is going to happen. Maybe we'll have robotaxis, robots, whatever.
Right.
If that actually doesn't come to fruition and people actually say, okay, well, now it's just a luxury car company, that is what I'm saying. That's going to cause a massive, massive sell-off. And all it takes is one miss in revenue. So that's where I'm concerned about people that are buying Tesla right now. They think it's just going to keep rocketing up, which it may do in the short term, 100%. Yeah, I can't predict short-term fluctuations.
Sure.
But if it just takes that one miss in revenue where Tesla kind of hits that cap in the luxury auto market, the stock is going to get annihilated. And at that point, then maybe it's potentially a buy.
Yeah, look, I agree with you. There is absolutely the potential for Tesla to go to, say, $600, $500, whatever. Even at that point, you might think that it's still very pricey, because you're right. If you're valuing Tesla as solely a premium automotive company that's more of a niche product, you shouldn't be in Tesla. Tesla has missed earnings plenty of times before, and usually after earnings, Tesla falls a lot. Like the delta that you can get on Tesla after earnings is usually plus or minus like 35%. It's pretty wild. It's not a stock you want to be in for the faint of heart. And I suppose for me, what I like doing is looking at where do I want to place my biggest bet. And as I said with the PEG ratio, when I do this analysis on other companies in terms of the growth that we haven't even gotten to price in yet or model in yet, there's so much more safety, and I know it sounds crazy, at Tesla, because even today its valuation with these growth projections isn't too fantastical, and that's only with it being the automaker it is today. There's so much excess demand right now that even if we had a recession, there'd still be excess demand for Tesla. So in the short term, I think there's some insulation to them being able to sell their products. Certainly once we get to like a run rate of 5 to 6 million cars a year, then it's like, okay, well, we better have a lot of people demanding our product, which is probably going to mean lower prices. But the beautiful thing is you're getting this lower peg relative, again, to other companies, while at the same time also pricing in zero of the following: robotaxis, semi-trucks, their energy division, their battery part of their energy division, right? Solar roof, things like that, just to sort of micro into that. Their insurance business. I don't think I mentioned the semi-truck business, and then the robotaxi, and then the actual robot. These are all things that are, to me, just margins of safety. I think it gets a little crazy when individuals price in models for all of these things, which we haven't actually seen the market react to yet. And so for me, I look at those and I'm like, no, I'm not going to give any value to that. I'm solely going to give credence to, I think this car is going to sell for, this company's going to have cars that are selling at a clip of about 10 million vehicles in 5 years at about an average price of $40K. That's all I'm doing at a margin of 30%. So if margin's better, if the energy business takes off, semi-trucks, Cybertrucks, robotaxi, the robot, self-driving vehicle, if any of those things take off, that's just bonus at that point.
I mean, you could be 100% right. I totally acknowledge that maybe he does come out with a robot and there's a robotaxi. Sure. But when you project and say it's, not fantastical that Tesla's going to sell X amount of cars in the future, when you actually look at the luxury auto market, which that's where it's priced right now, and I don't see any. I see Tesla getting 90% of their revenues from automobiles, and the vast majority of their cars are well over $40-something thousand. With interest rates rising, so when people want to finance a Tesla, it's just going to be more expensive. So at a certain point, Tesla's going to hit a cap, because there's going to be a certain amount of people that can afford to buy one. Maybe they'll buy other cars. Maybe they'll buy a BMW, an Audi, a Lexus, whatever. But at a certain point, Tesla can't just capture the entire luxury auto market, which currently generates about $450 billion of revenue per year.
Yeah.
And it's going to grow maybe 5%. So if you really think about it, it's like, okay, Tesla is going to hit a wall, in my opinion, unless they do something different. That's my main concern.
Let's hit that for a moment. So I just did a super quick Goog, and it's worth digging a little bit deeper. I'm actually a little surprised, because I thought the average vehicle price in our markets right now was about $38K. But then again, there's been so much freaking inflation, so we printed so much damn money. According to Car and Driver, in December of 2021, the average vehicle price, the average new car price in the U.S. is now $47,000, which is absolutely insane. The average luxury vehicle is about $73,100. And the average selling price of a Tesla is $50,000. So we're right there already. we're closer to the average vehicle price of 47 with an average selling price of 50 at Tesla than we are the luxury auto space at 73. Now, I'm a little blown away by that because I was much more inclined to just agree with you there I mean, maybe it's just the inflation has changed the economics here.
Well, so the average may skew the numbers, but you also have to look at the median price. Where if you look, like, you go Google, just Google SUV or Google, like van or something like that. Which
you're right, because you can have a 150,000 vehicle on luxury and it drags it up, right?
Yeah, it's going to be 28 grand, 30 grand, which is way less than just a basic Model 3. And if you're a family and you want to buy a model, a Y, you're starting at 60 something $1,000, which is way, 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 way more than the average or the median price of a vehicle. So
it's possible. Yeah, it's funny. I type in median. Nobody wants to talk about it. So maybe there's something to that. That'll take a little bit more digging. So, but yeah. No, look, I agree with you. Like, if
I was in the car market recently, like I just bought a van and I paid $27,000 for a Chrysler Pacifica. Cars are.
Oh, I was gonna guess either Odyssey or Sienna, but Pacific is pretty cool too, man.
I bought a nice Model Y, of course, but no, it was 27 grand, and then you have to add, titling, taxes. It was expensive, and I didn't want to pay that much. I got 2 freaking kids now, or about to.
You got it used though.
Yeah, I got it used.
Okay.
Yeah, but
I'm like, there's no way you got a new one in this market for that.
Yeah, and the Chrysler
Pacifica, great cars.
It's a high-end van. It's a decently high-end van. So maybe a new one is like 35 grand, something like that. But even then, that's still way cheaper than a Model 3. That's for a freaking family. If you have a family, you got to buy a Model Y. I mean, I guess you could do a Model 3, but if you got, I don't know how tight it is in there. So cars are a lot cheaper than you think. There are some cars. Tesla is not unaffordable to the average or the upper class, but for the average person, a mass market, people can't afford it. At least not now. Maybe that'll change, but as of right now, I see Tesla hitting that cap where you can produce as many cars as you want, but who's going to buy them? Tesla can produce 10 billion cars, but if people aren't there to buy it, what are you going to do?
Have you driven a Tesla? Been in a Tesla or driven one?
I have not. I would never do that, Kevin.
I think we need to set this up. We need to get you in this vehicle where it's driving itself and see how you feel about it afterward.
I'm not disputing it's a luxurious drive. I'm sure it's a great car.
Nobody cares about the drive, man. You see this thing changing lanes and driving itself. That's when you lose it and you're like, okay, I need to reevaluate this model.
Yeah, I'm sure. I'm not disputing it's nice, but at the end of the day, you just look at the numbers. It's like, well, who can afford this car? Maybe the top 30% of the United States, the households. You look at Europe, they have lower incomes than the United States, and you look at China, way lower. So it's like, how many can you actually sell? That's the issue.
In the future, and this all of the discussions around this vehicle have paused because of all of the inflation that is happening. But in 2020, Elon announced that there would be a $25,000 vehicle coming. And the speculation is this would be called like the Model 2 or whatever, right? Like a smaller Model 3. And it was really to compete, in my opinion, with like your kind of like Toyota Camry market, except it's an EV. So people do give some credit to EV as well. They pay a little bit of a premium still for electric vehicles because they want that. They want some of the cost savings, which personally, I don't recommend people try to buy electric cars for cost savings. Like you could buy a cheap hybrid or something like that. But usually what I said when I bought my Prius in 2011 was I just paid $8,000 more to get a Prius versus a Camry. I feel like all I did was prepay $8,000 worth of gas. Right. So usually like I dispute the whole like cost savings thing of EVs because you're just paying more for the freaking car. And it's just a justification. Right. But whatever, like I'm not going to change the market's opinions. But yeah, so you get a Model 2 and let's say that Model 2 is even like $32,000. Right. That's still a huge opportunity for Tesla where they're not in. And with their manufacturing process, they can easily enter that market and they will have to in the future. Something that I thought was really crazy, though, in the last earnings report from Tesla is they actually said that despite all of the inflation that's going on, Tesla is actually seeing a preference of their more expensive Model Y by buyers over the Model 3. And I'm like, well, we're still not seeing that price sensitivity, which is.
You see what I'm saying? That's why I'm saying it. If people are preferring the Model Y, which is the more expensive variant,
Yeah.
it's totally a luxury car company. Because like obviously the Model 3 is a lot cheaper, but even that one's expensive.
I mean, they're
Now, if the
close.
Model
It's like
2 comes
it's like
out,
just $6,000 or so difference when you look at the
oh,
scenario.
I thought it was like
60.
yeah, because I looked on Tesla and they have like the potential savings. I click away from that because I don't believe.
No. Get up. Turn that crap off. Yeah.
Yeah, it's like 62,000, something like that, which is insane to me. Like the average person will not be able to afford that car unless they just don't save money or something like that. But if they introduce the Model 2, which I'm sure they'll do, I don't dispute that, their margins are going to shrink because obviously they can't charge as much for a premium vehicle as they can for a mass market car. That's why I'm saying Tesla is going to eventually revert to somewhere in the market caps of all the current auto manufacturers. Could be Toyota, could be a little bit bigger than Toyota. But at the end of the day, the downside risk is massive. It's still from $1 trillion down to 300 billion, something like that.
Yeah, it's totally possible that, again, the consumer stops spending money and you've got some big issues, like that's totally possible. Yeah. Okay. So the cheapest Y is, wow, it's already 63K, and the cheapest 3, no, you're right. There's a bigger difference here. It's 47. So yeah, between that, you're 16K difference. Yeah, you're right. That's more than I thought. Yeah. And you're also right about margins compressing, because see, one of the reasons, in my opinion, Tesla started moving their margins up again is because they restarted in January of last year. They had a big production pause before that for the Model S and X's, the really expensive ones, the 100K plus vehicles, 120 to 140-ish. Those totally help push margins, right? So I think ultimately what you get is you get this blend. So they introduce a cheaper vehicle, which they're not even planning to right now. I think that all that went to the back burner because of supply chain issues and inflation, but in the future they will. Yeah, you're going to get this blended margin. And the goal is that, hey, well, if now we're selling more expensive vehicles and maybe the margin runs up to 35%, okay, cool. That gives us room for margin compression when that cheaper vehicle comes out in the future. Maybe it has less, maybe it's just a 2-door, who knows? I have no idea. We'll see what happens. But yeah, look, I mean, the other thing, and I hate to circle back to peg because I feel like it's like, I mean, again, we're making the assumption, or I'm at least, I know you're not, that people keep buying Teslas for at least some growth here in the future. You're looking for growth companies. You look at a company like Apple and you go, okay, well, we've got $158 share price here, earnings this year or next year of about $615 to $655, and we divide that, we get somewhere around a 25 PE ratio, and the growth rate for Apple going forward is expected to be under 10%. So you're paying 2.5 times right now for the safety of Apple. If anything, Apple and Microsoft have yet to really correct in this market, where we can go from like this 2 to 2.5 peg down to like the 1.5, and that's where Tesla already is sitting. Again, doesn't mean that if they, if they miss growth in 2 years, you're right, they're going to get shattered. But at least for now, the foreseeable future, there's no indication yet of that preference towards Teslas going away. If anything, there seems to be more demand coming for Teslas.
Yeah, I agree. So right now, it's extremely popular. Obviously, they came out with the first like really mass market popular electric vehicle. So I don't disagree with you. Maybe the next quarter or two, they might still keep on that trend in the analyst projections of 50%, 60%, whatever. But there has to be a time where if Tesla doesn't cut their prices and they're in this luxury car market, there is some cap. I don't know where it is. I can't predict the future, but I know the luxury car market is not as big as people are thinking it is.
I cannot get you off that luxury car market comment, huh?
I mean, look, if you look at the prices of the Teslas, and you even Google luxury cars, I mean, it comes up with all the different brands and Tesla.
We went through this. That's fine. Look. What you're saying is there is an absolute risk with Tesla that none of these fantastical products actually come to fruition and certainly drive revenue. A and B, that Tesla stops being sexy. People stop wanting to pay for it, and those are, you hit the nail on the head. Those are absolutely the big risks. If people stop wanting Teslas, you better get the F out fast. Look, I was in Peloton stock, okay? And I really like paying attention. And I'm not saying I'm perfect, but I really like paying attention to the companies I'm invested in. And so I have a lot of different subscriptions for like tracking these companies and consumer, mostly the consumers, right? And so one of the things that I noticed with Peloton This is probably like earlier last year. I don't know if it was March, April, or whatever it was. But one of the things I noticed was I go, oh crap, I'm getting alerts here from which doesn't exist anymore. This website Alexa was one of my favorites. I have to find a different one now, but they just shut down this month, which sucked. But anyway, Amazon owned them and bought them, and they're a website analytics platform. And all of the website metrics for Peloton were starting to fall like off a cliff. It was really, really bad. This was like spring of last year, which kind of makes sense because you're coming out of COVID 1.0 and we're going like summer. But it was like more than anything we've seen before. But in addition to that, we saw lead times for these Peloton bikes go from 6 to 8 weeks to like 1 to 3 weeks. And I'm like, oh, what's happening here? And you saw Google search trends plummet. And then they announce a price drop on the bike from like $22.99 to like $18.99. All of those things happen in a span of like 3 weeks. And I'm looking at it, I'm like, the stock's still like $115. I think I was into it probably for an average of like $90 or whatever. But I'm looking at all this stuff and I'm like, oh crap, this is really bad. And I'm like, sell. And people got mad at me then. They're like, dude, what the hell? Like, why are you selling out of Peloton? Because it's going down, right? And now you look at Peloton, it's like $20 or $30. And that's not to say like, oh, I'm a genius at market time or whatever. It's just to say that if you're in Tesla, you better be paying attention to people's interest and demand in Tesla. Because as soon as that wanes, the thing drops like a rock and you're not going to want to be anywhere near Tesla stock. And if you just want to
if you see the metrics change, like Peloton, whatever happened to Peloton, are you going to do the same thing with Tesla? Or are you just going to hold it because you think in the long run?
I will dump it. I will sell it so damn fast.
So I can agree with that, Kevin. I like that.
Yeah.
Okay.
So but for most people who aren't sitting in front of, the Bloomberg terminal all day long or trying to, whatever, I got the Reuters terminal right here, the Bloomberg, like I just like doing this shit all day long. I think for 99% of people, gosh, you don't even have to pick an index fund. Buy a basket of index funds. Like that's what I keep telling people is like, if you're worried about the market, don't go buy the SPY. Don't buy the QQQ. Buy a basket of them, which would be like going to M1 Finance and you go, all right, I'll take 25% of the Dow, 25% of the SPY, 25% of the NASDAQ, and 25% of the Russell 2000 and F it.
What about VT, Kevin? Come on, man.
I don't know much about the Vanguard funds. I just don't use them. What is VT? Like VTI in those?
It's basically VTI and VX. It's the total world stock markets. You have international and
that's like the 3,000 or whatever. Sure. I mean,
just go check Jeremy's little tracker in his videos. You'll see it in there.
VTI. That's the one. Yeah, that's okay. That's what I thought. Vanguard total. Sure. Fine. Yeah, I mean, they barely charge fees anyway. Just look what the expense ratio is right now. Oh, come on, man. Yeah. 0.03%. Yeah, dude, fine. There you go. You don't even have to do a bucket then. Just do VTI.
And you actually get Tesla in there. I actually have about 4 shares of Tesla. You may not believe that, but
yeah, no, I mean,
Tesla.
One of the things you could do too, honestly, is you could just, they have 4,100 stocks. I mean, it's kind of crazy. Yeah. Tesla's the 5th largest stock in that. Also, by the way, I've got to run in a couple minutes.
You're good.
We're going to do part 2. But yeah, I mean, the other thing that I think most people can do is like, just put like 80% of your money or 90% of your money in like VTI or whatever. And then if you want a little bit more exposure to La Tesla, do it. If Tesla does well, you'll beat the market because you're in the market, and then you'll be weighted a little bit more heavily towards Tesla, and you'll beat the market just with one extra stock of Tesla, essentially, right?
I 100% agree. If you want to buy some Tesla, cool. Keep it as like 5% of your portfolio, and the rest in the index fund. I 100% agree with you, Kevin. I like that.
Yeah. No, don't. I always tell people like, don't copy me, right? So. Yeah, I mean, those are just decisions that I'm making with my money. I have the conviction that I have, and I could end up getting hosed. But I'm willing to take the risk.
Well, I wish you the best of luck, Kevin. I hope it works out for you. Maybe it'll go to 2,000 tomorrow. I'll look like an idiot, but we'll see.
No, well, we'll have to do well, and short term, dude. Nobody effing knows what's gonna happen. I don't know if the sticks are gonna go up or down tomorrow, but I look every day because it's entertaining.
Stocks are fun. I agree.
Yeah. So, dude, we'll have to do a part 2 because I totally screwed up. So I owe you that. And to you guys in your channel, thank you for having me on. And let's catch up.
Oh, also, make sure you buy me a Tesla. You kind of said that earlier in the video, so
Oh yeah. Well,
I'll be waiting
man.
on delivery.
I don't think you want a luxury car.
Hey, if somebody else buys it, I'll take it. All right, man.
All
Have
right,
a good
dude.
day. Thanks for
All
coming on.
right. Thanks, man. We'll see.